Welcome to Mad Money. Welcome to Cramer. Other people want to make friends? I'm just trying to make a little bit of money. My job is not just to entertain, but to explain things. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Sometimes, out of nowhere, you just get hit by a tech lightning bolt. And that's how I felt about Chat GPT a little more than 3 years ago. What was this amazing creature? How did it write a haiku about a friend? How did it allow me to do a Mad Money-style interview with Gandhi? We found out quickly that this invention was the brainstorm of a company called OpenAI, launched on November 30th of 2022. 5 days later, 5 days, it had 1 million users. Ever since then, it's propelled the averages higher without ever coming public. Including today, the Dow gained 203 points, S&P climbed 1.55%. The Nasdaq pulled a gigantic 2.69%. Last week, we had another moment, this time from Google, which unleashed a new version of its own Gemini generative AI platform, a third version, and it was immediately hailed by many, including a perfect declaration from Mark Benioff, the CEO of Salesforce, who went on X, formerly Twitter, and posted this: "Holy ass, I've used Chat GPT every day for 3 years," he tweeted. And then it went on, "Just spent 2 hours on Gemini 3. I'm not going back." He then went on to say, "The leap is insane. Reasoning, speed, images, video, everything is sharper and faster. It feels like the world just changed again." Now, ChatGPT has 800 million users. Some would say it's the fastest growing business in history. So the idea that it could be dethroned so quickly is inconceivable. If you ask even Gemini, it would agree. Although I should point out that this chatbot is self-effacing, not boastful. It's also drier than GPT and not all that friendly. But as a regular and at times heavy user of ChatGPT, I too suddenly find myself migrating to Gemini. Normally, this kind of release doesn't mean all that much, but the stakes in this business are gigantic. Alphabet, the parent of Gemini, has seen its stock rallying furiously. A real rocket ship. It's up 68% so far this year, much of that coming in the last few weeks, as more and more people realized it was undervalued versus the other six, the Magnificent Seven. And then it went nuts into overdrive as people started hearing about Gemini 3, and then they saw it, and wow! Alphabet already had a big leg up on other challengers to OpenAI. That's because they figured out how to link Google, the search company, to Gemini, the AI company, in a seamless way. Itself a remarkable feat. Many people thought there'd be a ton of cannibalization, but they just combined them onto the same page. The geniuses behind Alphabet, and I mean geniuses, managed to figure out how to take advantage of Google to build Gemini, so it was never hard to find. But it's only with this Gemini 3 that there's a real breakout in the stock. You have to understand the implications here, both positive and negative. First, the positive. Google built Gemini on the backbone not of NVIDIA, but on a proprietary chip designed with Broadcom, an unheralded trillion-dollar stock that vaulted 38 points today, or 11%. It was an even bigger deal for Broadcom than it was for Alphabet, which rallied 6%. But the negatives were huge, too. OpenAI is not publicly traded. However, you can only imagine what would have happened to its stock if it were public. OpenAI is spending hundreds of billions of dollars to be number one, and its huge user base makes it the largest, regardless of Gemini's prowess. But if OpenAI's user growth were to slow, even a tiny bit, because of Gemini, well, that could be a big problem for both OpenAI and, more important, its business partners. Remember, this company has something like $1.4 trillion worth of spending commitments. In order to raise that money, though, it needs to keep growing like crazy. And it has been growing like crazy. Now, maybe OpenAI is a revolutionary version of its own product in the works. I, for one, would never write them off. Nor would I say that this news is definitely bad for Oracle, their biggest business partner. I think that Oracle, which builds data centers better than anyone, can get lots of takers for its product. It doesn't just live or die depending on OpenAI, but it is taking on a lot of debt. Still, if your business is hanging on ChatGPT, it just became more precarious. How about that? Which brings me to the most controversial alleged loser, and that's NVIDIA. This chip company reported a blowout last quarter, and its stock flew up in the morning, only to reverse and ultimately get hammered in the afternoon, finishing well off its high. The market needs its biggest stock to do well. That nasty reversal and its decline from 212 to 182 and change has been a nightmare. The numbers seemed to end when we heard that the president's once again thinking about letting NVIDIA sell chips to China. Right now, the company's not including any numbers from China in its projections. So anything that allows the company to sell in China would be huge. And that, I think, is why the stock leapt from 176 at its lows today to 182 and changed. It closed up $3.67. Now, every member of the Magnificent Seven did rally. Amazon moved up 2.5%. That was a report from J.P. Morgan that did it. That report said that its retail business has never been stronger. You know, it's been a while since Amazon was valued for its retail business. For years now, it seems like the Wall Street only cares about the Amazon Web Services, which is very important and I believe is doing quite well, although I keep hearing that it isn't growing fast enough. I think the doubters are wrong. It's going just fine. Tesla stock should have been down if you view this company purely as a car business. We heard some very damning numbers from China that would indicate Tesla's being priced out of the electric vehicle market over there. But Tesla's now about Elon Musk's vision of self-driving cars and robots, which is why it just keeps roaring. It's up 7%, nearly 7% today. I mean, this thing's incredible. Microsoft is quite muted. I mean, you just don't hear much about it right now, even as its business seems to be humming along. Probably because it's connected, yes, to OpenAI. Meta's been quiet, but it took off today, up 3% on the back of a Wall Street report suggesting the decline's overdone. I agree with that. But the biggest winner after Google may be Apple. Remember that Google pays Apple more than $20 billion to be embedded as the default search option in your iPhone? We keep hearing that Apple has stumbled in AI, but let me ask you, has Apple stumbled in search? I think a $20 billion check to allow Google to access your user base is a pretty good deal. How about another $20 billion for Gemini for AI, right? In other words, we give the artificial intelligence from Gemini to Apple, right? And you pay Apple another $20 billion. You could argue that Google won't pay it, but I think many others would love to cut that deal if they don't. Here's the bottom line. We have to recognize that Gemini is the biggest threat to Chat GPT we've seen so far. There's simply no two ways about it. Gemini's existential for OpenAI. The company, the emperor, better have something better, something to strike back, because otherwise the narrative will be that OpenAI has no close. Let's go to Bob in New York. Bob.
Hey, Jim. Thank you for all you do in helping the small investor.
Sure, Bob.
I
Thank
really
you.
Appreciate it.
Thank you.
Jim, my question to you is Tractor Supply, buy, sell, or hold?
Well, I talked about Tractor Supply this morning on Squawk on the Street, and I felt that it had a pretty good chance to be able to make a comeback here. I know it's down a lot. I'm going to say you want to buy that one. Right? Look, we have to recognize that Gemini is the biggest threat to Chat GPT that we've seen so far. And Chat GPT better have something up its sleeve to counter. Otherwise, this problem becomes really existential. On Made Money tonight, due to the government shutdown, there's been a dearth of economic data. And with the release of new numbers coming tomorrow, I'm setting you up for what you could expect. Then Travis Kelce and Janet Parters are pushing for change at Six Flags. I'm sharing if I think it can be the catalyst that the stock needs, because it's been a loser. And close viewers know we love the off-price retailers, but what about the REIT that houses them? I'm checking the Kimco to get a better read on the situation, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.